In the energy quadrant, taking a look at the August natural gas futures, which have dropped for a third straight session, resuming the bear trend after a single session on July 8th when natural gas moved 2% higher. Today we hit the lowest level we've seen in the August future since May 13th. That low was 2.261 and it was down 2.92%, so almost 3% lower. The high today, 2.343, was up 0.6%, but as we come in toward the end of the session, we're basically on those lows, down about 2.8%. We had a positive week going, but it looks like we're going to finish our fourth consecutive week lower with 1 day of trading left in the natural gas futures. Today's weekly EIA natural gas storage report printed a build of 52 billion cubic feet, matching expectations, but the build was quite a bit less than the 5-year average build for this time of year, which is around 85 billion cubic feet. This build decreased surpluses to 528 billion cubic feet and increased supplies from 3.045 billion cubic feet to 3.097 billion cubic feet. We also look at national demand, weather-based demand. We're looking at natural gas prices, and it'll actually be higher for most of the next 7 to 10 days than usual. High pressure is going to rule much of the U.S. with highs in the upper 80s to the 100s in some areas. This includes horrible heat over much of the West, which is going to bring highs predicted to reach 110 degrees and possibly higher. The only place of relief will be the Great Lakes and the Ohio valleys, with highs of 70 to 80 due to the remaining cooling effects of former Hurricane Beryl. As we get into next week, though, those temperatures will rise and it'll move them closer up to the mid-90s, which means the heat wave will be covering most of the U.S., keeping demand for natural gas high.